Hi guys, welcome to another honeystocks.com special analysis for Christmas. I want to just kind of take the opportunity just to kind of thank everybody again just for the comments, the emails, the messages. I do appreciate everything. I just want to apologise also just for the poor lighting for this weekend's analysis. I'm currently at the Fairmont in Whistler, and the room that I have and where I'm currently recording this at the moment is not the greatest, so hopefully you can see me clearly enough. But as always, I have around 15 or 20 charts that I think should be on the radar for you for the forthcoming, let's say, 2 weeks. I don't see myself being active whatsoever over the Christmas period. It's a notoriously low volume environment. Doesn't mean price can't go up, it doesn't mean price can't go down. It just means that we have to be aware of the overall volume and what's actually going on. Big moves, I give them less weighting when they're on low volume, but I think everybody probably has their own interpretation. But yeah, if anybody has any questions, thoughts, comments, feel free to comment below as always. And yeah, I'll get back to my snowboarding. This has been an absolutely incredible weekend so far. I'm incredibly sore. I don't know how many of you have tried to learn snowboarding, but I'm in agony. That's probably the way to put it. So yeah, let's dive into the charts and let's see what they tell us. As always, guys, please do pause the video, make sure you're comfortable with that before watching any further. It's basically just saying that there's not any investment advice here, that the information is just that, it's just generic information, it's not investment advice. I know absolutely nothing, as most of you already know. Now, what I would say is that I'm registered with the CMT Association. Most of you already know this. I'm currently working my way towards my chartered status at the moment, so technical analysis is what I'm widely known for, and it's why you're probably watching this video. Despite obviously the market being on a rocket ship over the last couple of months, I know there's a lot of you out there that are still struggling to put everything together. There's a lot of you that are just not getting it. So if you are in that camp, please do stick around for a couple of minutes at the end. We have a special Christmas offer that runs out on Boxing Day. I would highly encourage you to stick around because it's massive, and it follows on from our huge Black Friday offer as well. Now, just want to quickly touch on this. This is the Fear and Greed Index. Now, a lot of you out there obviously do pay attention to the market and sentiment data, etc. But the Fear and Greed Index is actually quite relevant, because when we get into these extreme greed levels, it's really just telling us that the sentiment of the market is a little bit too aggressive. And generally speaking, when we get into these extreme upper levels, we can expect a bit of a pullback in the market. Now, I'm obviously going to be going through a couple of charts with you that will perhaps support that, but it's very, very important to just kind of use the data that, in an intelligent way. That's probably the best way that I can put it. Now, if you do get value from this, please do subscribe to our channel. In the bottom right hand corner, you should see a little subscribe button. And like I said, at the end, I am going to be going over our special Christmas offer, which ends on Boxing Day. So let's just dive into the charts. Now, as always, we're just going to start off with the S&P 500. There are many charts that I would like to be able to present to you, but obviously time is a factor. I have a life to live. You guys want to have the best information in the quickest time. So the S&P 500 is the go-to index for that. And what we're seeing at the moment, obviously we've broken out, but a couple of things to kind of point out here. We have the percentage of stocks trading above their 50 period simple moving average is very, very high at the moment. Now, when we get into the upper ends of, again, the levels, we can expect these pullbacks. Now, we can obviously see that on the daily chart, the RSI has reached overbought conditions as well, so we can expect a little bit of a pullback from that data also. So what that really says to us, it doesn't say that we need to go running to the hills and, you know, profit taking our positions or exit the market. It's not what the chart is saying. The chart is really just saying to us, look guys, done very, very well over the last few months, but now it's maybe time to pay attention a little bit closer to what technicals are telling us, and you know, we can expect perhaps a little bit of a pullback there. Now, if we switch it over to the weekly chart, a lot of you that follow me closely will be well acquainted with this chart already. This is one of my charts that was featured in a prominent investing and trading magazine, and we can see again what I'm highlighting with my chart is that when we reach these extreme overbought conditions on the weekly chart, again we can get these declines in the market. When we get an extension above the 30 period weekly moving average, again we can get these pullbacks. Now, what the chart is really just saying at the moment, guys, is that we are trading quite a bit higher than the moving average, and when we get these high levels in the past, again what happens? We get market pullbacks. Now, again, that in of itself doesn't mean that we have to run for the hills. There are plenty of areas of the market that we can look at when the market is pulling back. There are many defensive areas of the market, and also it doesn't mean that your individual stock is going to decline either. It just means that we have to manage risk appropriately. I can't stress that enough, and that's all the chart is saying. Just manage risk, be aware, and don't get overly aggressive at the moment. That just seems incredibly logical, and I like to use a lot of logic and common sense with my analysis. Now, most of you are probably wanting me to just dive into the charts for the individual stocks, so let's just dive into those. Now, again, Starbucks is performing very, very well. My guy's got a trade alert on this above the 200 period simple moving average on this bounce here. It's still bullish, guys. I think we just, again, manage risk appropriately. I do think ultimately in a bullish environment, this is going to go and test $100. That's the hope. So, you know, let's see what happens with Starbucks. Still very much bullish at the moment. Okta, I think bullish above the 200 period daily moving average, I should say. Again, it looks like we found a bit of support. I think if we get a breakdown below that, then I'd probably look to just exit any positions. I wouldn't like to take any chances, because I think at that point there's a possibility that it could go, you know, test $100 around that area again, and obviously that would create a lot of mental barriers. Again, AYX, still thesis hasn't changed. I will become bullish on this stock if we get above that 115 level. It's still just been, you know, grinding sideways over the last week. So again, it'll be interesting to see what happens, you know, tomorrow when the market opens. We've got Twilio. Twilio, again, we've broken out above this trend line here. Not massive conviction at the moment. I would like to see a bit of buying volume come in just to demonstrate that it's a move with conviction. We are above $100. I have said in the past that I would like to see it above $100, but I also want to see that confirmation and that volume momentum to come in. I think that's very, very important. So I'm watching Twilio with a lot of interest at the moment. Thank you everybody who reached out after last week's analysis. Match group has been massive. Many of my subscribers, clients have moved in on this last week and doing incredibly well. Again, I think we just say, you know, we're bullish above the 200 MA, and all you need to be doing now at the moment, guys, is really just managing any trades to profit. I think there are logical upside targets. Yes, you're going to have to deal with pullbacks along the way. You know, if the market opens Monday and, you know, you've got a little bit of a pullback, it doesn't mean you have to exit your positions. It just means that you manage, make sure you don't lose money, and give price enough breathing room to advance. You don't want to be stopped out of your positions too quickly. Again, Roku, exactly the same as last week, guys. You keep asking about this stock, so again, this does look like it's a very prominent level for the stock, so I'd be very mindful of this, and I'd be wary about any breakdowns below this level. We've got Amazon, again above the 200 MA, seems to make a lot of sense for me. It's very difficult to envisage a bullish market environment and Amazon not participating. I've said that quite a few times over the last month or two, but you know, it continues to grind sideways, and this is why it's important to just be mindful of the levels. But we are looking like we're going to go and test that 200 MA again. If that's the case, I think you've probably got about 12% upside. Cisco Systems, I think this chart has a lot of merit. Is it a stock or a chart that I would look to necessarily buy the breakout? I don't know. In this case, I would want to assess the technicals, but I think this is the price level to be wary of. I think if you get a decline here, I think if this is a stock that you're currently doing well on and you've bought this dip down here, I think this level makes a lot of sense to maybe just say, you know, thank you very much, Mr. Cisco, let's move on. NVCR, again, thanks to everybody who's messaged this week. This is one that many of you are doing very, very well on. Again, I do see this as the upside target, $91, $92. Home Depot is moving rather well, 200 MA bounce. Again, I think you just have to manage the trade to profit, guys. It's moving very, very well at the moment. Logical upside targets, I think around 240. Does seem like it's got a bit of merit here. So yeah, I would probably be looking at that chart and just saying that's the upside objective. There are certainly levels that you would need to be mindful of on the move back up here, but congratulations to everybody that bought in on that 200 MA bounce. CYBR is one that I've been asked about a lot this week. I highlighted this one last week as a breakout potential, but we got an immediate failed breakout. Now, when we get that red candle, you need to be very, very mindful of the technicals on that red candle and what's actually happening. So that red candle was a warning signal to just say, do you know what, let's not take any chances, let's cut early and let's revisit another day. We had divergence with momentum and we just didn't get the required spike in price and volume, etc. For that to be a valid breakout to want to take a position. So that's something to absolutely be mindful of. Caterpillar, I think we're close to potentially getting the next breakout above 150, and I think there's a 6-7% upside there until the next logical reevaluation point. So I think that's very, very important. Estee Lauder, I think the chart makes sense here. This is the weekly chart, close to a breakout here. Obviously, the trend itself, you know, speaks very, very well. So I think that's a chart that you might want to do a bit of due diligence on. Square Inc is one that obviously is massively interesting to many of you. A lot of you, and I've touched on this over the last few weeks as well, because you know, I get a lot of emails about this one. And with Square Inc, I think this is the level to definitely, you know, pay attention to. Is it a chart that I would necessarily want to take a position in? Probably not. Perhaps above this breakout level, above $70. I think if you're in there and you're holding, I think above this level, I think you can remain bullish. But I think below it, you know, I think that might, you know, create a bit of a problem. Activision Blizzard has broken out. It's moving. I think that's the key thing here. Above $57, I think you can be bullish. Avalara is one that I think you should add to your radar. I think we've got a valid descending trend line here, and I think above this level, I think if you do your own analysis on this one, build out your chart and obviously be mindful. I think around $77, $78 is something to obviously to watch there. I think with Etsy, I think Etsy is one potentially to add to the radar here. Potential double bottom pattern. It does look like it might potentially move, but you know, it is moving and chopping about in a sideways range at the moment. So I would be, you know, watching this one. Might be valid after Christmas. Salesforce, again, looking like it might be close to a breakout here. The chart for Salesforce isn't remotely appealing, just when you look, you know, to past history. So I think, you know, you would need to assess the technicals there on any breakout. Is it a breakout I would want to buy? I don't know, but I think that might be a chart that's interesting over the next week or so. Sony Corp is moving. I think we're obviously above $60. I think most of you know that this is one that many of my subscribers and clients have moved in on. So, you know, absolutely, there's a great upside potential here. And yeah, let's see what happens. Twitter, I think we have $32 here. I think this is the level to really pay attention to with Twitter, actually. I think we've got very clear rising channel there. Seems to be some commotion outside. Fire engines. Interesting. Anyway, we have potential breakout here. So yeah, Twitter, very, very interesting at the moment. Facebook, again, social media stocks, close to potentially breaking out here. I think above 210 seems to maybe have a bit of merit there. So yeah, absolutely pay attention to that one. I think we've got Coupa Software, and Coupa Software, obviously one of the tech names that I think a lot of you like. There's many of them. But this is one that I think we can say here that we're in a bit of a triangle pattern. Generally speaking, when we get these patterns, they can induce quite a big spike in volume price move. So I'd be watching this one in either direction. I think Coupa Software is definitely one to perhaps pay attention to. We've also got MasterCard, I think above $300. This is one that I've actually highlighted this weekend in my client only analysis, but I thought I would include this one in my social media analysis as well. A lot of you know already that I have two different weekend analysis. I've got my free generic social media analysis, just the requests that you guys have put in over the last, you know, week, 10 days or so. And I also have my client only analysis, my subscriber analysis, which is all the premium charts. And this is one that I thought I would include this week, because this is one of the premium charts that I think warrants a bit of due diligence. Target is clearly moving. It's one that's been talked about a lot amongst my subscribers, actually, and clients. And it seems to be off and running. It looks like we're getting a bit of another breakout here. So it'll be interesting to see where Target goes from here. And we've also got ZTS. Now, I think with ZTS, I think with the move that it's had recently, it's not necessarily something that I would want to jump in on right now. Yes, we've got the breakout, but I would be mindful of certainly the momentum with the RSI, the levels. I would be more inclined to perhaps look for maybe a retest entry. But congratulations to absolutely everybody out there that's in ZTS at the moment. It's obviously moving very, very well. Now, that's the charts this weekend, guys. Now, it's obviously Christmas at the moment, so I think, you know, over the course of the coming weeks, as I highlighted at the start of this video, I do see my work stepping back quite a bit. I'm sure we all want to spend time with our families, but I think with the analysis, if you are somebody that does struggle a little bit and maybe you want to learn a systematic approach to technical analysis, and maybe you want to learn an uncomplicated style of technical analysis, we're doing a really good offer at the moment where if you sign up before Boxing Day, we're providing our technical analysis program, which we charge a lot of money for, as part of our $500 annual subscription. Now, with that annual subscription, you do get 1 year access to all our trading ideas and our scans. I'll show you what that looks like in just a second. You'll also receive access, as I alluded to a second ago, for our premium weekend analysis. You'll have access to an incredible trading community. You'll have access to myself, so any charting requests that you might have, you know, I'm happy to provide my chart as a backup to your own. So if you want a second opinion, I'm always on hand. Now, obviously I've introduced myself to everybody over the last few weeks, but for maybe those of you that don't know, I'm Sam, and like I said at the start, I'm registered with the CMT Association, and that's quite a big deal. I think there's a lot of individuals and people that maybe promote on social media, etc., that maybe don't have the credentials and are not working their way towards anything, and you know, they just use their own beliefs on technical analysis rather than understanding what technical analysis is and how you should apply certain tools. I see many mistakes from a lot of social media guys, but you know, that's a conversation for another day. But I obviously run honeystocks.com, which is, you know, super popular, super well known website. And the really unique thing about what I do at honeystocks.com is with every trade idea that I publish, I record everything on my website for complete and open transparency. Now, obviously within December, there's been a few more trade ideas since then, which are doing very well. But, you know, I do update my trade ideas list every month so that everybody can see what it is that I'm doing. You can see the date that I'm recommending the stock, you can see the price, and you can go and see how the stock has gone on to perform. And that's really what a trade idea looks like, guys. I'm very specific. I map everything out. Again, I don't know anybody else that does things like this, you know, to the degree that I do. I think most gurus, I think most how do I want to word this? I think most subscription services, a lot of them have you signing up to a WhatsApp group, and you'll have 10 minutes notice to get into a trade. I don't work anything like that. I have my own app. I've got a system in place where you will have at least 12 hours notice for any trade idea. I give plenty of time, plenty of opportunity for you to conduct your own due diligence, which is massively important as well. If you don't like a stock, I always say don't take the trade just because I like the technicals. But you know, you can go and have a look and see what that looks like. That's a trade idea for Starbucks. I think we're up at 88, 89 now. Arrowhead Pharmaceuticals, I think we're up at 65, $70 on this one. ENPH again, $17, we're up at 26. So that's actually what I do, guys. It's not just about, obviously, my, you know, incredibly popular free social media platform. I have a community. I've got an incredible approach. It just makes a lot of sense to absolutely everybody, and I think that's why the subscribers, my clients, do as well as they do, because we don't overcomplicate things. So if you're somebody out there that maybe wants to fit trading around maybe a career or a business, maybe you want to move away from day trading, maybe you just want better consistency, and maybe you just want to learn as well, that's something that I provide and I can offer as part of our service. Because, you know, there's nothing worse than learning from YouTube, and, you know, learning from those losses is absolutely soul destroying. I know what that looks like. So if you're out there and you're somebody that is suffering a little bit, maybe you are tired of hunting around social media, maybe you're just, you know, tired of gathering up all the content that you can, maybe you just want to just put it all together quickly and effectively, that's something that I can probably help with. And I think for 500 bucks, it's a bit of a no-brainer, but naturally I will leave that to you guys. There's always a new way. So if you've stuck around to the end, you know, from the bottom of my heart, thank you very much for watching. Thank you for all your support over the last couple of years. Obviously, we're coming up to Christmas and New Year. I wish you all the absolute best of times with your families, etc. I am obviously based in Vancouver at the moment, so if anybody is struggling, I can generally respond to messages, emails, etc. in a bit more of a timely manner than what I would do if I was back in London or Edinburgh, etc. So yeah, feel free to reach out if you need anything, and thank you very much for watching. I'll maybe speak to you soon.